reading this report, and I couldn't help but feel like you were looking at perhaps a different economy to the one that we've been looking at. Why the optimism? Because it's pretty broad-based too. You're looking at factory activity, you're looking at resilience in the consumer, retail sales, even seeing a pretty sharp jump in loans, which we know, missed the Bloomberg target last month by just about half.
There's a dangerous consensus out there right now, Heidi, that China is on the verge of a collapse. And the first thing that these data make very clear is that's simply not the case. I think in all the doom and gloom going on right now, markets are overlooking the fact that if you look at Chinese consumer spending towards the travel and leisure sector, towards chain restaurants, dining out component, that's actually continued on a pretty strong trajectory all summer long. You're even starting to see some amounts of improvement on other goods, such as furniture and appliances and cars and so forth, luxuries. The big problem remains the property market, where you have very serious amounts of weakness. And I think that is overshadowing some of the positive news in the economy right now.
Shehzad, when it comes to the biggest criticism, obviously the concerns over the property sector is a major elephant in the room, but more broadly, there are structural, demographic, long-term challenges for China, right? Do you peg this as a cyclical slowdown that can be reversed, or a structural slowdown which we're going to see, slower growth for longer as the new normal here?
Yeah, there's no question that we're getting a little bit of both. So first of all, there's no question about the fact that there's a structural slowdown happening. As we've discussed before, slower growth, sub 5% growth should absolutely be worked into models as we think about projecting China's long-term GDP. That said, yes, of course, we're seeing a little bit of cyclical slowdown in parts of the economy. The property market is in a multi-year restructuring phase. I think we get bad property news, more problems with developers, at least for the next couple of years. And we really still haven't found the floor in property prices either. So I think investors should brace for more bad news ahead over here.
We, of course, have heard the slew of measures being announced by Beijing, including the potential reduction in rates in existing mortgages. How much all of this will help the Chinese economy?
I think these are marginal measures being put into place, and none of these are going to be the silver bullet which will automatically turn things around. Probably by the end of the year, maybe early next year, we'll begin to see some of the impacts from the changes around mortgage policy. Policy, by the way, has been increasingly supportive all year long, but it hasn't led to that shift in sales, with home sales picking up, our prices finally starting to rebound, that we've been on the lookout for. So I think the moderate actions that we're getting out of the government will have a moderate impact, but nothing's going to change overnight.
Given the weaker yuan because of the monetary policy divergence around the world, how much does that hurt the spending power of Chinese people, and does this make a difference in the net benefits for the economy?
Yeah, it obviously is a big concern for the government, right? They've been intervening pretty aggressively for the last couple of months or so now, trying to put a floor under the yuan so it doesn't fall any further. Obviously, the positive part of that story is, does it help boost exports a little bit, potentially? But the long term there, that is obviously a big challenge. There's just no question about it.